Hey there, my name's Jason Andrew. I'm the CEO and founder of Impact Savings and Fund Money. And in today's session, I'm going to share with you a strategy that we used as financial advisors servicing hundreds of clients across Australia. Last year I sold our financial planning business to a group that manages over $100 billion globally. They're a listed European company, and we sold that business. And now I'm on a mission to share as much information as I can to people, because I realized when I had my business there that there were so many people that could not access advice and could not afford financial advice. And so what I'm going to do now is to share with you just one of the things that we did to implement into our business to help clients in terms of cash flow and debt modeling. Now, we spent, when you see an advisor, a lot of the times they're going to talk to you about investments and returns and portfolios. We spent over $200,000 on a system called values-based financial planning to understand what's important to people and to understand your values, and then link those up with the goals. Now, what we found was that when we had those conversations with people, things like portfolios and returns and investments really were secondary conversations. The real conversations was around, well, how do I manage my life? How do I manage my cash flow? What do I do with my money coming in? How do I save more? And how do I achieve my financial goals? So today I am going to share with you something just on the debt front, but it's really, really important for you to understand this. This is only intended to provide you with general information. It's general nature only. It doesn't need to take into account your investment objectives, particular needs, or financial situation. The content should not be relied upon as the basis of investment decision. You should seek independent advice from professional advisors before making any decisions regarding the content of this or any investment decisions. Okay, so that's really important. What I'm about to show you is not financial advice, but it has a lot to do with your finances and how you think about money and how you think about your debt. And speaking of which, if you actually do have a problem with your debt, then you need to contact the National Debt Helpline on 1-800-007-007, Monday to Friday at those times, or go to that website, ndh.org.au. If you are watching this from another country, then go to your government website and seek debt assistance. Okay, so let's move into how you can maximize your cash flow when you are burdened with debt. So do you often get to the end of the month and think, my God, where did all the money go? I've got all these debts sort of racking up. I've got a mortgage, I'm paying for it. My expenses coming in. I've got kids, the fees, school fees. I've got credit cards going up again. What am I doing about it? I'm doing okay. I'm earning an income. Well, I'm going to shift into a case study to share with you an idea that you can look at implementing. It's a DIY solution, so you need to go through and run your own numbers. But what I do have in here, let me just get rid of that banner there, and I've created a case study. So I have just like a family example that I want to run through you. I've got it here on the whiteboard. The strategy that we've got is called a snowball strategy, where you actually utilize your payment structures and you allocate certain amounts to each debt each month, so that you can at least, the first thing you need to do is meet your minimum obligations. So that's 100% a must. If you're actually having issues with that, do speak to your debt, the people who you owe, the institutions, because they are very good at working at ways to work with you. So, okay, so I think I've said enough in terms of if you're struggling and this is not financial advice. Let's get into the case study. So I've got here an example of a family. So I've got, there's a husband and wife, in this case, an example. One's working part-time. The first one's got a salary there, $90K. One's working maybe part-time, earning $50,000. Those are the net per month figures coming in. So 5.7 for the person that's earning 90 and 3.5. You're earning there like over $9,000 net. So that means pay coming into your bank account, hitting each month or fortnightly, or however your pay is paid. Now, the other thing, obviously, is that you got to work out how to structure your accounts, which I can get into I'll get into another video. But let's say you're getting $9,000 coming in, and you have expenses of about, let's say, $5,000. Now life just happens. You keep getting big bills. There's always things to pay for your kids. You're spending maybe $500 a week on groceries. You got utilities. So before you know it, you're spending $1,000, $1,200 a week on expenses. And it's driving you nuts, but that's just the reality. And this is before your mortgages. Now, in this case study, I've applied family here that's got a $600,000 mortgage, plus $15,000 credit card. And one of them is kind of getting maxed out, and the other one is, getting close. But you've got, so if this sounds familiar to you, what do you do in this situation? You've got expenses there, you're entering an income. Do you just go hard and pay down your credit card? Do you put everything against the mortgage? Do you draw against the mortgage, put it against your credit card? I'm not going to go specifically into that because it's entering into financial advice, but I want to show you a strategy that you can use yourself and find out, because this is online. Anyone can do it. I'm going to give you a website, which I don't have it there. So what I'll do is we're going to share my screen and just show you the screen of the actual site, and then you'll be able to see that quite easily. So, all right. So here is the site called, here you go. So let me get rid of the case study. So this is called undebt.it. Now, this is a US site, so do not use this. Do not ring them up or try and get some advice from them. But they do have a really cool calculator on here. We use something similar in financial planning tools, which we'd pay thousands of dollars for a month just for their calculators. So you guys are getting this for free. So go to this website here, undebt.it, undebt.it/debt-snowball-calculator. All right, now, so what this is, it shows you how to allocate your funds, and then shows you the impact in terms of paying down your debt. So a lot of the times we would say to a person, look, it's not necessarily about paying down your debt and going hard on paying it down, because, that's pretty stressful, actually doing that. And actually, you want to be able to allocate your funds so that you know that your debt payments are under control and that you're going to pay it down. And you're not having this sort of burden and this heavy feeling over you because you've got this debt there and you feel like you've got to pay out your card and it's going to take forever to pay down your mortgage. All right, so what I've done here, I've got a so you've got here debt ball snowball strategy. You put down there's a couple of other strategies you can choose from, but we're just going to choose this one here. And you'll put down the account name. So, for example, your credit card 1, and then your current balance, and then your minimum monthly payments that you need to pay on that. This is in terms of the contract that on your statement, and then apply an interest rate. So all I've done here is, here's a little something I've done earlier, is I've applied our example. So the family that we've got here, they've got 2 credit cards. One is at $5,000, and the other one is at $10,000, and their mortgage is at $600,000. Here's the minimum payments here. And the thing to remember on this is that this is just an example only. So the payment amounts may not be correct 100%, but it just gives you an idea on how this kind of works. So we have got here, this is an interest rate at the moment that we found online on one of the bank's calculators. 3.67 is what you can get on the variable rate right now on the 12th of November, 2020. And here's your minimum monthly payment. So all up, that's how much you need to pay in minimum. You got to pay, almost $3,200 in just debt payments. And that's pretty heavy. You are earning you got $9,000 coming in, 5 of that goes out. So you've only got an extra, maybe a couple of $100 after paying down your mortgages. And that's kind of what's stressing you out. So what you can do is, if you say, well, let's say I've got that $4,000. I don't want to spend all that $4,000 to keep a buffer. Let's put $3,500 towards the debts, to all these debts. So rather than just chucking it all in one, let's just see what happens if we put down $3,500 allocated to paying down all those debts together. And you press go. And you'll see here that when you scroll down, here's the outcome. So what it shows you here is that you would put down, on credit card 1, you'd pay that one down first, because the strategy here is to pay down the one with the lowest balance first. So you pay down on credit card 1, that would be paid out. $398 goes to that, and that's paid out in a year. Then the other ones in the meantime are getting their minimum payments. And then once this one is paid out, then the other one kicks in. So you can see here, this increases up. And then the money that was going into credit card 1 goes into credit card 2. So that payment increases. And then in 2 years' time, you've paid down your credit cards. But importantly, you've met your obligations on your loans along the way. And you've given yourself a buffer. Now, if you've got that $500 and you're spending too much and you're spending more, $5,000 a month is just too much, you can bring that down. then you're able to find some more money to put towards these debts. But this just illustrates the fact that if you can just get out of your mind this thing that you just need to pay down this debt straight away, otherwise for some reason you're an evil person, because that's not the case. Meet your minimum obligations and go that little bit extra, and then know that's in place, and then go out and start earning more money and saving more money and increasing. And then when you get those increases, you can either put them in more into the debt, or you can see an advisor and start an investment, or you can just increase your buffer somewhere else. The key is for you to change your mindset into feeling more comfortable that your debts are okay because you're able to pay them down. Now, look, interestingly here, if you put down $3,500 and in 2 years' time, rather than just going and spending that extra money that you're putting in that credit card debt, if you were to allocate that to your loan, then this is a 30-year loan. That means, let's go scroll to the bottom, that you will have paid that off in 254 months as opposed to 360 months. So effectively what you're doing there, that is a savings of, it's like 8 years off your loan. Okay, so 360 minus 254 divided by 12, yeah, it's about 8.8 years. So 8 years and 10 months. So that's quite significant impact, and that's just in you knowing that you've got a strategy. So that's the key thing. One of the key messages for you to take away from this is not so much that, one, get the strategy in place. That's important. But that feeling that you get from having a strategy. So imagine if that's you. Go inside here, play around with the figures, do your own DIY, see an advisor if you need to get some clarification. But, this is just purely a cash flow exercise. So, and just get comfortable with actually having a payment plan. Put it aside, know that it's done, and then you can go ahead with your life and start saving and getting into investments, etc. So that is a strategy that I would highly recommend to check out and do yourself and come up with your own conclusions, because this is about empowering you to do that. I'm not here to give you advice. I'm not saying you should do that. There's just some ideas in there for you to consider. Now, the other thing that you really should consider is going to this website here, fundmoney.me, and downloading the free cash flow breakthrough ebook so that you can get more ideas like this, so you can start breaking away and breaking the chain of debt and feeling stressed and having a cash flow breakthrough. So go there now, like this page, please, so that I can start giving you more information. And also go in there, download that book. It's free. It's yours. It's really simple. It's from my years, 23 years in the industry. It's from servicing hundreds of clients around the country, being bought out by a listed company, manages over $100 billion globally. So there's a couple of key tips in there, and you can get all that for free. All right. So I look forward to seeing you guys at the next one. See your happiness, guys. Cheers.